Should you invest in gold? That is a question that a lot of investors ask themselves throughout their lifetimes. There's a lot of different opinions within the investing community, such as some people saying that you need to allocate a certain percentage of your portfolio to gold, and there's even some opinions that gold is completely useless. Even among some of the most important investors in the world, there's actually differing opinions. So, Ray Dalio is someone who is an advocate of gold investing. Ray Dalio is the founder of the world's largest hedge fund, so he certainly knows what he's talking about. He personally thinks that gold will be a top investment during the upcoming paradigm shift for global markets. Ray Dalio is of the opinion that gold will be a good investment amidst a lot of economic uncertainty and political turmoil, so it's more of a hedge against uncertainty. Warren Buffett, on the other hand, has a different opinion on gold. Everybody knows who Warren Buffett is. He needs no introduction. And he is specifically saying that the doom and gloom scenario, or basically the uncertainty scenario, isn't a good enough reason to buy gold over stocks. He said, "Those who regularly preach doom because of government budget deficits, as I regularly did myself for many years, might note that our country's national debt has increased roughly 400-fold during my last 77-year periods." Now, he's saying that even though the country is in debt, it can still go into more debt, and so political certainty can always increase. He then goes on to say, "Suppose you had foreseen this increase and panicked at the prospect of runaway deficits and a worthless currency. Instead of buying stocks, this fortune-telling investor might have bought 3¼ ounces of gold for $114.75. You would now have an asset worth about $4,200, less than 1% of what could have been realized from a simple unmanaged investment in American business." So he is way more bullish on American business and does not see it as a good hedge. So, two investors who clearly know what they're talking about have different opinions on gold and whether or not it's a good investment for your portfolio. Taking a look at gold in the long run, you can clearly see that there are periods where gold does show a lot of prosperity. In fact, there are some periods where it actually outperforms the S&P 500, but there are also periods where it does not do so well, such as the time period between 2011 and 2015. In fact, this is a historical chart of a gold to S&P 500 ratio. Basically, when the price is above this one line right here, then that would mean that gold is outperforming the S&P 500. We can see that when it does outperform, it can last for decades, such as the period between 1955 and 1970, and also most recently the period between 1990 and 2008. While I'm on this chart, I also want to point out that there is a myth out there that stocks and gold are inversely correlated. Here we see no such thing. In fact, I almost want to say that the correlation is kind of random and there is no significant negative correlation. Sometimes stocks go up, sometimes gold goes up, sometimes stocks go down, and sometimes gold goes down. Also, while I'm on the subject of dispelling myths, a lot of people say that gold is a good hedge in terms of times of recession. Let's go ahead and take a look at the last two recessions. So this is 2008. Let me zoom in a little bit. Does that look like a hedge? Clearly not. Clearly we can see at the peak in 2008, gold was about $1,000 an ounce, and towards the bottom, gold was $700 an ounce. Now, that's a loss of about 30%, which is slightly less than the S&P 500, but clearly it does not do well in times of bear markets. Let's go ahead and take a look at the previous recession. So this is the period between 2000 and 2001, close to 2002. Does this look like a hedge? This one looks slightly better, especially considering the stock market did go significantly lower around 2001. But once again, gold is not appreciating with value. In fact, at best, it only goes down slightly less during times of economic recessions. So after dispelling some myths and looking at these differing opinions Is there a middle ground of investing in gold? I found this article that highlights how I feel about owning gold versus something known as gold miners. So, gold miners are stocks or companies that actually mine gold and make profits off of gold, and they're also pretty highly correlated with the price of gold. In fact, if we zoom out a bit and go back to the chart of gold and we compare this to GDX, which is also known as the gold miners ETF, the most popular one, you can see that there is a significant correlation. In fact, from 2011 all the way down to 2015, this ETF did not do so well, and it started to pick up around 2016 to where we are right now. So let's try to understand the dynamics between gold and gold miners. Now, first off, Motley Fool goes on to say, for many gold investors, there's nothing quite like owning physical bullion. Whether you buy gold bars or various types of coins, the tactile quality of having gold you can hold in your hands appeals to the senses. So, a lot of people think that the only way to invest in gold and benefit off of its appreciation is by actually buying the physical thing, and also it's kind of appealing to people to actually, be able to hold it in your hands. Obviously, it's not as simple as just purchasing gold. There does come premium when you try to own the actual physical gold, and there's even a premium when you try to sell. The other thing about owning gold is that, in addition to buying costs, you also have to figure out how to store your bullion. So, basically, in short, it is not an easy process to try to purchase physical gold. The other alternative, of course, is to actually buy an ETF that tracks gold or silver. Silver is also a precious metal that benefits from some of the same advantages that gold has. However, the gold and silver ETFs are actually really bad, so they do have a pretty high expense ratio and they decay over time. So, what's the alternative? So, there are the diggers or the miners. Now, it also cites Warren Buffett as saying that bullion produces no income. However, there are stocks, there are real companies that once again benefit from the appreciation of gold, which are known as gold miners. Some of them pay dividends, but a lot of them appreciate over time as well. One drawdown is when it comes to earnings and profits. There are other things associated with actually selling and buying gold. Mining companies do have to deal with cost of labor, equipment, fuel, and other parts of the production processes. So even if gold rises, profits can still fall if their operations aren't intact. On the other hand, and this is actually my favorite part of the article and my main point, on the other hand, gold can give you much greater percentage returns than investing in bullion, which is absolutely true. So, taking a look at this chart of gold, we know that from the end of 2015 to the middle of 2016, there was a pretty significant price increase in gold. That amounted to, I want to say, about 30%. If we take a look at one of the largest gold miners, now this is not me cherry picking and picking one that's going to support my argument the best, but just taking a look at the largest gold miner, we can see that over that same time period, ABX or Barrick Gold Corporation increased by 240%. Now, in my opinion, there is a best of both worlds scenario with this gold and gold miners debate. I personally treat gold as an asset that will increase and decrease over time, but for the most part, I do think that it will increase over the long run, as most commodities do. Personally, I find gold to be a lot more tradable and stable than something like crude oil or natural gas, with just so many uncertainties out there. And personally, I think we're in the midst of a new bull run in gold. We have broken out of a trading wedge that's been in place ever since the end of 2015. As you guys can see, over the past 4 to 5 weeks, we just clearly went above it. It's possible that we come back and retest it before breaking out higher, but certainly a really good development. And the other thing is taking a look at the long-term moving averages. When these two are sloping upwards and green is above blue, basically the faster above the slower, good things tend to happen. And we recently got that cross again, and we're still experiencing some bullish momentum off of that. But clearly, we are in the beginning stages of what could be something a lot larger. And I do think that gold over the long run will appreciate to $2,000 an ounce and above. I really want to highlight that this is not me trying to sell you guys anything or convince you to buy gold at all. This is just my opinion and an educational video. However, if you are interested in buying gold stocks, I'd love to show you guys my M1 Finance Gold Miners portfolio, which actually invests in a lot of gold mining stocks that I did a little bit of research in. So I've had this portfolio ever since August 27th, 2018. As soon as I recognized that gold was potentially about to break out of this range, I started to invest a little bit every single day into this one. And so far, it's been doing really well. So up 66% according to M1 Finance. Some of these gold miners are in the hundreds of percent in terms of returns, and most of them are green. So I expect them to be even more green in the future. Now, gold in general, I would consider to be something similar to cryptocurrency, for example, in that it shouldn't be that large of your portfolio. Um, just for reference, I have about $1,000 in this experimental narwhal portfolio. And between the other two M1 Finance accounts, that makes up just a small percentage of my total M1 Finance money. So I'm not going exactly crazy with gold miners just because I like them. But I do think that it offers significant upside, and I'm very excited about gold in the future. So, in summary, I don't personally believe in using gold as a hedge. At the same time, I don't think that gold is necessarily useless when invested in the right way. And the right way, in my opinion, is gold mining stocks. Let me know if you guys have any questions on gold and gold miners, or if you guys plan on investing in gold or like gold. With that being said, hope you guys have a great day and see you guys in the next video.